Good morning, ladies and gentlemen. My name is David Breer, and welcome to episode 48 of the 11FS FinTech Insider Breakfast Show, brought to you this morning by our good friends over at Salesforce. Those guys are helping businesses manage through this crisis. In this show, we bring you the best and the brightest from around the fintech and banking landscape every single weekday, straight into your homes at 8:30 BST, here live on LinkedIn. Today, I am really thrilled to be joined by Gavin Sewell, who is the CEO over at Honcho. What we're going to be doing, so this morning, we're going to be talking about the state of the insurance market amidst everything that's going on with COVID-19, what the ecosystem looks like for marketplaces, specifically in financial services, and what Honcho's up to next as well. So good morning, Gavin. How are you doing?
Good morning, David. I'm fine, thanks. I'm enjoying the beautiful morning in the sunny northeast of England.
Yeah, I mean, we were just saying offline, weren't we? I think we, like, location-wise, you up north and me over east. I think this is. I think we were pretty well prepared for lockdown, weren't we? It's nice to feel suddenly vindicated of living out in the sticks, isn't it?
Yeah, I mean, for us it was super easy. Obviously, a young digital company, it was easy to up sticks. Everyone go home, and we live in a fantastic place for that. So yeah, it's not been too much of a chore so far.
I mean, literally, you made the comment before we went live, I'm going to have to shut the door to block out the sheep noises. Like, in central London, nobody ever hears that, do they, at all? And that's just what happens in the out of London spaces, doesn't it? But
yeah, no, that's true. The farmer's been moving the sheep around recently, and it's all a bit noisy here.
Indeed. All right, guys. Thank you so much, everybody, for tuning in this morning. Really, really appreciate you guys making the time on this sunny Friday morning. As always, we love getting your questions. So if you can leave those in the comments and the sidebar on LinkedIn, we'll just weave them into the conversation as we go. So, Gavin, maybe if we start with a little bit of your background. I mean, for anybody who doesn't know, tell us a little bit about Honcho. I mean, one thing I definitely know about Honcho, you guys do great swag. Unfortunately, I think my Honcho t-shirts are in London, else I would be wearing one this morning. But there's a lot more to the company. So give us the background.
Yeah, so just a bit about me. I'm a computer scientist by training, so a bit of a geek. But I've spent 20-something years working in technology and financial services. I guess most specifically in electronic and algorithmic trading. And Honcho is an insurtech based out of the northeast. And we operate what we believe to be the first reverse auction marketplace for the distribution of insurance products.
Very interesting. I mean, how does that tell us a little bit more about reverse auction marketplaces for insurance then? Because that's like you say, that's a very new concept to the insurance space, isn't it?
Yeah, indeed. So a reverse auction is, I mean, if you don't know what it is, it's classically an auction backwards. So rather than the buyers of a product bidding against each other to offer the highest price to the seller, it's the sellers of a product bidding against each other to offer the lowest price to a purchaser. So that's classically what a reverse auction is. I mean, with Honcho, we take it a few steps beyond that, where the sellers of a product are competing against each other to offer the best product, actually. So they can flex and optimize their product in real time to give the best product and the best price to a consumer. So what that means is the consumer can come to Honcho and they can say, right, this is what I need in a product, and here's some of my details, and we can pass that out to a panel of insurance providers who can understand whether or not they have a good product at a good price, whether that person is in their niche for their product set, and if they do, they can put a product into our marketplace. Having done that, they can learn what their competitors are doing in terms of providing product to that same consumer, and they can learn that in real time. And then they can optimize their product and price to present the best offering to the consumer, individual to what that consumer needs right now, and in the context of how the rest of the market is responding to that consumer's needs.
That's interesting because with the sort of, particularly in the insurance space, obviously the rise over the last couple of decades with aggregators and more recently more traditional marketplaces, it does offer quite a significant difference there, doesn't it? Because, like you say, it's not just about price, it's about the product and the product fit for the consumer as well, which obviously has been quite the significant gap in what those other options really do, right?
Yeah, I mean, I think that's certainly the case. Like, price comparison websites have been around for 15 years or so, and they drove a step change in consumer convenience. So you can go to one place and you can examine and receive quotes across 100 and something policies, let's say. The the challenge here, or the unintended consequence, is that those price comparison websites are kind of driven by price, and they order the results set to consumer by price. So if you're a product distributor and you acquire a lot of your volumes through price comparison websites, there's an imperative there to get to the top of the list. And what does top of the list means? It means cheapest price. So you're encouraged to structure product that has the cheapest price, and therefore probably doesn't have all the features, bells and whistles and things that a consumer might need, or perhaps might think that they're getting. Because they're encouraged to buy the cheapest, you're encouraged to sell the cheapest, and therefore the consumer outcome is perhaps not the best product for the consumer.
Yeah, no, I've definitely seen that. I mean, my background was in insurance before it was in banking, and definitely we saw that during my time at Aviva. It was, I think, at that people were really making decisions on the products that they were buying based on features that were commoditized that they didn't really even understand in the first place, which is really worrying, isn't it? Particularly in a market like insurance, where it can mean, when push comes to shove, the difference between somebody really being covered for the things that they think they are or not covered at all for them. I'm actually quite surprised that there hasn't been more, obviously, with everything that's happened with PPI and everything in terms of the selling space within banking. I'm surprised there haven't been more cases of that actually within the insurance space, because I'm still not convinced most people really understand what people are buying, or the level of cover or the level of protection that they have. So yeah, companies taking more of that responsibility to really make sure that the product fits the need, and the need not just in the short term but the long term, I think is a really, really great thing to do. So I mean, so what's the goal of Honcho then? How are you? What's the sort of misty mountain you guys are aiming towards?
Yeah, so look, I think we firstly want to help customers buy the right product for them. That's where we're starting, and that's kind of how Honcho has grown in the first instance. I think where we would like to take this eventually is the capability for insurance producers, insurance vendors, to be able to structure a product unique to a consumer at the time that consumer is looking to buy it. And we can help them do that by asking the consumers the right questions about what it is they need, and hopefully asking them that in understandable English format, by saying, look, what if this were to happen? Would you have the right coverage? Do you need that courtesy car, or can you live without a car for 2 days, for example? So we ask them a bunch of English questions, and then the product vendors can structure their products on the fly to meet those requirements, and also in the context of how the rest of the marketplace is responding to that customer. So that's where we want to take it. And I think we're a long way from that today. Insurance vendors tend not to be able to structure products in real time. They can turn some options on and off potentially, or choose a different scheme at the point of sale time. But that's where we can take this eventually.
Now that's interesting. Like you say, it would require not just from a technological perspective in terms of the product configuration capability to get there, but really just those guys thinking about product creation in a really different way, right? The utopia from an insurance perspective is always that it's a one product for one customer, and really we should be getting there soon, shouldn't we? Hopefully with the advancements that we're seeing. But I mean, how has everything affected you with obviously everything that's happening with COVID? Because I mean, obviously there's a lot of changes with your customer base, but for your employees also, it's quite a changing times.
Yeah, so I mean, from the point of view of Honcho, the business, I mean, it was easy, as I said, for us to move to a fully remote basis, and I think we're just as productive, perhaps if not more so, than we were when we were all traveling to an office every day. We're a small business, right? We're only 9 employees. I think 10 in a week's time. Actually, we've managed to recruit someone fully remotely who's joining us a week on Monday, which has been fantastic. But so it hasn't had a dramatic impact on us, I think, as a business. From the point of view of our clients, we see a range of different things happening. Some businesses have furloughed a bunch of staff and have gone to a sort of BAU footing. But others absolutely haven't done that, and they've got developers sitting at home, perhaps not doing some of the things they were previously doing, and who are raring to go on other projects. So we're seeing those businesses engaging perhaps more strongly than they were before with us in terms of some of the integration projects that we're doing with them. So from our point of view, we're still absolutely flat out. We have more work than we have staff still, and we're really pushing to get a bunch of stuff done. I mean, from the point of view of the insurance industry, at least with motor, I think the price comparison websites have seen a circa 30% drop off on volumes, without the commensurate drop-off in actual policy sales. So I think what's happening is you're losing a bunch of people who are doing the kind of what-if analysis on pricing through price comparison websites, but still maintaining those who need to insure vehicles in the motor context. Now, I mean, people aren't divesting vehicles at the moment, right? They're not selling their vehicles. I mean, it's difficult to do that right now. And I think motor showrooms aren't either open this week or opening again on Monday. So they still need to insure those vehicles, right? So we have, I mean, from the point of view of motor insurance, there's a captive audience out there because you have to insure your car. So we're seeing actually better conversion rates, I think, than pre-crisis.
Interesting. I mean, like you say, with less and less people really driving around. I mean, I joked yesterday, unless you're a senior politician, you're probably not going on long drives right now, are you? But then actually the demand and the change of how people are sort of dealing with motor insurance particularly is pretty interesting. I mean, do you see, I mean, to your point, I think we were talking about this offline, but I mean, I'm sort of getting used to not having to be on that train every morning, you know? So do you see probably a change in behavior on the other side of this when lockdown restrictions are relaxed a little bit and people are a little bit more freer to move? I mean, that could have quite a major impact on really how motor insurance needs to be constructed.
Yeah, I mean, I think it's interesting, and I think there's some competing forces. I mean, firstly, what's going to happen with the office? You know, I know you've discussed that on some of these shows. And my feeling is that there's going to be a real lifelong change to what the office means. And we would be very interested in moving to a model whereby we used a space collaboratively 2 days a week, and then didn't use a space 3 days a week, and only paid for 2/5 worth of rent. I mean, I think that would be fantastic. Yeah. So I think you're going to see a lasting drop off in commuting. But at the same time, I mean, certainly now, right? I mean, so car usage, I think through the crisis, dropped to something like 20% of norm, and it's back up to circa 50% at the moment, whereas public transport has stayed down at something like 20%. So people are jumping in cars perhaps more so because they want to stay out of the public domain, as it were. So you have these competing forces. I think we will see people more interested in paying for what they use in terms of mileage with car. So the likes of Buy Miles have an interesting model for that, right? And perhaps we'll see more of a prevalence of that type of policy.
Yeah, I agree. It's definitely sort of a changing market, isn't it? Some really interesting questions over on LinkedIn. Some really interesting statements as well. So Adrian, I'm not sure if there's a question in here somewhere, but I'll try and kind of find it. But it's a good statement nevertheless. He says, so this Adrian Field, good point on price-driven comparisons. Insurance is quite a strange product because it's one that you never really want to use, and you don't know the real quality of it until you have to use it via a claim process. So, I mean, I've always sort of felt that with insurance, that really it is a safety net. But I think if you have a bad experience with an insurance company, that's when you're likely to change more frequently, aren't you? But if you have a great experience, and this is where I think companies should really spend a lot more time focusing on claims than they do sales, as it were, because if you've got a really leaky bucket when it comes to renewals, then that's never going to kind of lead to a good place, is it?
Yeah, indeed. I mean, I think that's, as you say, that's kind of the unique feature of insurance, is you don't really know what you've bought until you use it. Although that's changing, right? I think with some of these products, where particularly telematics, for example, right, you're constantly engaged with the insurance company because they're reporting to you on your behaviour over time, and that conversation is ongoing, and therefore you feel like you've bought a product that has meaning all of the time, rather than potential meaning at some point in the future. So I think if we were to move more to that variety of policy types, so that pay as you drive telematics type policy, then there's room there for insurers to be to be great providers all of the time. Beyond that, I think we need to look at performance ratings in essence, right? So de facto rate products, for example, you can absolutely see consumer feedback around products playing an important role in the purchase process as well.
Well, and I think particularly for those insurances that are more about really buying peace of mind. I mean, at that point with things like life insurance, then like say you really hope you never have to use them, but you're buying a sense of comfort, aren't you? And I think it's it's how the insurance companies sort of reinforce those things to people on a day-to-day basis, so that they don't lose that connectivity. But good point, Adrian. Nigel Walsh, good morning, Nigel. Thanks for joining us. Where did the name come from? So I'm sure you guys must get asked it a lot. Not just good for t-shirt slogans, but where did the name come from?
So it stands for you, the consumer, being the head honcho, right? You're at the center of the buying proposition. People are competing to present you the best proposition. You're the head honcho. Look, we didn't come up with it. There's a fantastic creative agency in the northeast of England, in Newcastle, called Gardner Richardson. They did a whole bunch of fantastic whiteboarding ideas and all the rest of it, and honcho is where we ended up. So it's the credit is all with Gardner Richardson.
No, I mean, I think that makes a lot of sense. It's and the whole, like say, naming something that embodies the ethos of it, of, like you say, putting the customer in charge. Yeah, I think it's a great thing to do. There's a question here from Deval Gall. So are you working with the industry to speed up the creation of new products? Is this something that you're sort of pushing those guys on when it comes to the infrastructural side of things? Because in order to allow real-time product configuration or real-time product offerings, you're probably going to have to push them quite far to make that happen.
Yeah, so I mean, it's incremental change, isn't it? I think. I mean, that's how we have to start this. So we have reused a lot of the plumbing that sits in the industry today. We tried not to reinvent the wheel on that side as much as possible, but we're providing them with data and capability that didn't exist prior to Honcho, right? That they can see in a real-time basis as an insurance provider on our platform. You can see in real time what your competing insurance providers are doing in terms of product, because we score each product that comes into the marketplace. We have something called the Honchometer score. That Honchometer score is calculated in real time for each product that comes in, and we share it back with each of the providers, so they can all see how the other providers' scheme is scoring for that particular consumer. So that allows them the ability today to start to write some algorithms that can flex some of those things. So if you're a digital broker, you can reach into your insurance scheme portfolio, as it were, and potentially pull out a different one in real time. So you might put one scheme at the beginning of the auction and sell a different scheme at the end of the auction. So we're beginning, we're providing the possibility for insurance providers to start to flex various elements of their product to a consumer at the moment. Now, it's incremental, right? I think giving them that capability today, the realization that they can make those changes in real time, will start to drive the thinking that they can flex other elements of their product creation in real time. But I think what they're going to need behind the scenes is a back office platform that allows for that, right? And I think there's a technology set of changes that need to happen across the sort of the back office instruction provision for insurers for this to be able to happen in the future. But that's absolutely the capability that we're opening up, and then we're very much encouraging them to move in that direction.
Well, and obviously, as you say, it's showing that consumers are making decisions based on things that currently the insurance organizations may or may not be able to deliver. So these things are always sort of driven by opportunity, aren't they? And if it becomes
and we can show today through data that our consumers are more likely to buy a product where that provider has rebid for them, and by rebid I mean flex the product or the price, and that does convert better.
Yeah, completely. And it would do. It's the more you feel like a product is fitted for you, the more likely you are to create a relationship with that organization, aren't you? But I mean, it's been interesting times for you, not obviously just with everything that's happening with COVID, but I mean, you guys managed to close out your last funding round. So it was literally on the 8th of April, wasn't it? Which, I mean, it was pretty much at the peak of everything that was going on. How did that go? And was it an exercise of just making sure the documents were signed, or was there a bit more work happening in that period?
No. I mean, I think it's fair to say it was a little bit fraught. We closed the crowd element on the 4th of Feb, I think. But then there's a couple of VCs who supported us through this raise as well, and a bunch of high net worth individuals. So closing all of that out mechanically takes time. And what you see with crowdfunding, right, is that people can withdraw their investments between the close of a pitch and the actual legal completion. So I think the original target completion date for us was something like the 24th or 25th of March, which I think was the worst day on record in the financial markets. So look, we did see a bunch of investments start to disappear, and we ran around making that good with other investors. So we closed the target that we'd hit, which was fantastic. But yeah, I mean, it was a little bit fraught. But look, I mean, we closed it all out in the end. We did everything fully digitally. Certainly, we'd not closed out a raise before where there hadn't been wet ink signatures. So, that was all very interesting for the various lawyers concerned. And yeah, I mean, we were very pleased to get it done. It was certainly a little bit fraught and totally unusual.
I can imagine. Yeah. Well, congratulations for closing that out. It's gives some good stability, doesn't it, in terms of what comes next? But in terms of what does come next, I mean, what are you planning on doing with the funding? What's the growth aspirations? Because as you say, you're hiring, you're looking at kind of expanding. What are you going to be doing with that investment?
Yeah. So there's a couple of things we're primarily focused on, which is product and distribution. So from a product perspective, we've got a ladder of releases coming up over time. The next big one for us is Honcho 2.0. And in Honcho 2.0, we've got a couple of products. We've got a van product and a learner product. The learner product we're probably not going to release for the time being, because not a lot of learning going on right now. But we'll release a van product in the next month. And that will be our first SME product as well. So that's super exciting for us. Mm-hmm. And alongside that, we're spending a lot of time on partnerships and partnership capability. So we built Honcho from the ground up to be an API-enabled business. And we're working across the board with the likes of neobanks, personal financial management apps, other marketplace ecosystems to be able to provide Honcho as a service that fits seamlessly into their customer journeys. Provides that benefit of being able to buy the right product at the right price to one of their consumers, and does it in a way that there's seamless data sharing, which shortens the journey, makes the purchase experience far more convenient, and provides a fantastic customer journey across that integrated product set. So we're spending a lot of time on that as well, and working across the board with integrations with our partners. So that's our next kind of year's worth of work. Product and partnerships. We'll continue to do some brand marketing alongside that as well, and then we'll look to do a Series A in Q1 or Q2 of next year.
Fantastic. Well, it's fantastic to see it doing so well and growing. And as you say, I mean, I'm not really convinced that the insurance market is really fit for purpose or human consumption, so we say in this stage, in terms of actually how the products are sort of configured. So it's great to see somebody really sort of trying to mix that up a little bit. I mean, there's some really interesting questions sort of come back again on LinkedIn. So I mean, is there any plans? So there's a question here from Philip Scott. Is there any plans at looking at insurance for gig economy workers? Because obviously, I mean, in the current climate and everything that's happening, that side of things sounds like quite a good opportunity as well.
Yeah, so we're not doing that today. We're focused on motor for the next year. That allows us to generate out a bunch of traction to be able to demonstrate how the platform is working, how the rebid cycles work, how the auction works, etc. I think we will see us linking up with people in partnership who offer those products, and we're absolutely intending to offer other SME and micro business type insurance in the future. That will, for us, it'll be beyond a Series A, but indeed, yes, and we'd very much like to look at that.
A comment here from Julian Brewer as well. So comparison sites typically suffer from shorter LCV. So customer value, for anybody who's not understanding that acronym, for the underlying insurer. Are you seeing a different and hopefully higher LCV under your sales model? Because I would sort of expect that, given the deeper level of relationship, and maybe you're only going to see that as you get more data sets and time sort of goes on. But would you expect to see a different type of buyer behavior in year 2, year 3, year 4 than you would do with typical comparison sites?
Yeah, so I mean, a couple of comments on that. I mean, firstly, it's too early for us to tell. So we launched the product at the beginning of September of last year, so we haven't quite hit renewal stage yet. I think that our product is going to resonate really well with a discerning buyer, someone who understands that there are a whole bunch of different policy features and that we're really helping them buy what's best for them. I think for those who want to buy absolutely the cheapest product at any cost, Honcho is not well suited to those people, and I think PCWs serve that need. But with those discerning buyers, with them understanding that we're helping them buy the right product, and with them seeing that they're getting the right product, then we very much expect them to come back to that purchase experience again.
I completely agree with that, and I'd say, I mean, similar to what we said earlier on, or my point on life insurance is, insurance for me is the feeling of being okay if something goes wrong. And if you've bought a product based purely on what is cheapest, likelihood is your actual needs are probably not going to be being covered by that, aren't they? So, I mean, Durham's quite an interesting space for fintech and insurtech right now. I mean, obviously with Atom and other players kind of setting up there. I mean, it seems like there's a sort of a great ecosystem really sort of being built in the north of England. I mean, how has it been sort of starting up an organization there?
Yeah, so I mean, it's been fantastic, right? So Atom are our neighbours; they're 2 doors down the road from us, and there's great business support in the northeast, particularly for fintech. So we're working across the board in the northeast to try and present the northeast as a centre of excellence for fintech. We won a spot last year on the Tech Nation FinTech programme, and I think the northeast was the biggest represented region outside of London. So we had 2 other fantastic businesses in the northeast, Canny and Paid, who both won slots on that program as well. So there's a real, I think, sort of groundswell of capability in the northeast, and you know, we've not only got Atom, we've got Sage, we've got Virgin, we've got NBS. So there's a range of decent fintech businesses up here of varying sizes, and I think we're on the verge of being able to have an ecosystem that allows for someone to build a career in financial services in the northeast, and there's a career path across a bunch of companies that can support that, and I think that's very exciting for us in the northeast.
No, I agree. It's, I mean, and potentially even something that's with everything that's happening with COVID and the realization that actually the remote workforce works in exactly the same way as a centralized one, then we might start seeing actually real open changes in terms of actually sort of remote working access in various different places. So it's really interesting to see how what happens next. Nobody really knows, do they? But let's hope it's positive in terms of where we're going. Unfortunately, that's the top of the hour, so we really probably better let everybody get back to work on this this rather nice Friday. But Gavin, thank you so much for joining us. Can you tell us where can people find out a little bit more about you and Honcho?
Yep, so gethoncho.com, go and check out our website, and you can find us with a similar handle on Facebook, Twitter, and LinkedIn.
Fantastic. Well, congratulations with all the success. It's been great to see it grow. And yeah, we'll definitely kind of come back to you in sort of September and start seeing, like you say, as that data set really racks up, then you can really, I'm expecting to see real difference in buyer behavior. So, all right, guys, all we have for you this week, but we'll be back with you on Monday with a pretty killer lineup, I have to say. So our next week is going to be silly again, which is good. The shows just keep getting bigger and bigger. So on Monday, we've got Hiroki Takuchi, who is the CEO over at GoCardless. He's going to be coming on to talk about international payments, their new payments intelligence tool, and a bunch of other things that are happening over at GoCardless. On Tuesday, we've got Sophie Gibbord, who is the Chief Growth Officer at OpenPaid. She's going to be joining us, talking to us about what they're up to, how the product's going, how her time in the organization has gone as well. If you don't know Sophie, previously at Fedor and a bunch of other great companies as well. Wednesday, not one guest, but 2 guests. So we've got Cindy White from MyTech and Andy Moore from Anna Money. They're going to be talking about onboarding and UX and what the market opportunity for modern banks and the rise really from a self-employment perspective. What does that mean really in terms of the market, and how are those guys being affected by everything that's happening with COVID? On Thursday, we're joined by Joan Dewar, who is the CEO over at GPS. If you don't know, they've been powering up fintech from the get-go of fintech. So some really interesting developments that they've got over there. And last but not least, on Friday, we have Dan Morgan, who is the European policy lead over at Plaid. Going to be a really interesting show. I mean, Plaid have been on an absolute tear in the last couple of months. So it'd be great to talk to those guys and see what they're up to next. Going to be a killer lineup next week. It was a pretty damn good week this week. Though, if you did like this show this week, I mean, let us know. I mean, hell, let everybody know at this stage as well, because what we're trying to do is to reach as broad a audience as we can. So the best way for you guys to let us know that you're enjoying it is tell us, but more importantly, tell everybody else as well. All right, guys, that's all we have for you this week. See you same time, same place next week. Have a great day, everybody. Stay safe and enjoy the weekend. Goodbye.
Cheers, David.